The Peter Schiff Show.
Welcome, everybody, to a brand new week of the Peter Schiff Show on this last day of the old month of January. Well, the markets opened kind of quiet. There was a lot of nervousness, I think, headed into this session because the markets were unsure of what would happen on Monday morning. You know, I was actually initially going to be on the CNBC special live show that was airing last night at 8 p.m. Because of people's worries over the market and how the events that are playing out in Egypt might have played out. I actually couldn't. They ended up not being able to use me. They had problems at the studio in Stamford that I used to do the hits, so I wasn't able to do the show, but I know it ran nonetheless. But anyway, the market opened up very quiet. In fact, as we speak, the Dow was up 9 points. The S&P is up 4 points. Pretty quiet. You know, gold is actually losing a little bit of its luster from yesterday, but it's still net ahead. Gold's down about $7. It was up about $25 on Friday. Oil prices, which were initially firmer, they were up about $1 to $1.50 early last night. They're now down 45 cents. Oil's just trading under $89 a barrel. But remember, we were up about $4 on Friday. I think the biggest reversal is the dollar, because the dollar had gained the so-called flight to safety or quality rally, which I've never really understood. I think it's more of a Pavlovian dog reflexive move because there is no quality or safety in the dollar. I think it's one of the riskiest currencies you can own. But anyway, the dollar is giving up all of its gains from Friday. In fact, the dollar index is now lower than it closed Thursday. And we're down at 77.68, down 45. We could be headed for new lows on this move in the dollar index today. Dollar is down across the board against all currencies today, but it is particularly weak, I guess, against the European currencies, the euro, the Swiss franc, the Swedish kroner. Even the pound is pretty strong today. So far, today is shaping up to be more of a non-event based on what people were bracing themselves for, But the events taking place in Egypt are definitely something that we need to look at from a geopolitical perspective and from an investment perspective. In fact, we're going to have a conversation at the half hour. I will be joined by my guest, Eric Bolling. Many of you might know Eric Bolling. I'm frequently a guest on his show on Fox Business, Follow the Money. And I'm not really sure what time it comes on. Sometimes it seems that it's on at 9 o'clock, immediately following the judge's show, Freedom Watch. And sometimes it's on at 10 o'clock, so I'm not really sure what the schedule is. But Eric has been on a lot of the Fox programs. In fact, before that, I think he was one of the original members of Fast Money on CNBC, I think, before he made the jump to Fox. Prior to that, he was a rather successful commodities trader. He was on a New York Merc, and he's traded gold, the oils, natural gas. So we're going to talk about the inflation that's going on in Egypt and how the big increases in the price of food are kind of feeding the unrest down there, and how a lot of this is in large part the result of the U.S. and its inflationary policies with the world's reserve currency, and how we export that throughout the world. You know, again, we're continuing to hear a lot of rhetoric coming out of Capitol Hill on the showdown coming to increase the national debt. You know, I wanted to play a little sound from Senator Boehner, not Senator, I just promoted him, Congressman Boehner, speaking about the need to increase the debt ceiling and how the spin that they put on this that's cut number one.
Do you agree with administration officials and other economists that defaulting on the full faith and credit of the United States would be a financial disaster?
That would be a financial disaster not only for our country but for the worldwide economy. So remember, the American people on Election Day said we want to cut spending and we want to create jobs. And you can't create jobs if you default on the federal debt.
So defaulting on the full faith and credit is unacceptable to you?
I don't think it's a question that's even on the table.
Okay, so first of all, Boehner says that we were elected to cut spending and create jobs, and then in his next sentence if we don't increase the debt ceiling, we're going to default. Well, how about you don't increase the debt ceiling, you cut spending so that you avoid default? After all, if they're there to cut spending, then why don't they cut spending? The reality is they want to increase the debt ceiling because they are not going to cut spending. They want to keep on spending. Therefore, they have to increase the debt ceiling to enable them to keep spending. And again, here you have a powerful congressman basically stating that the global economy is dependent on America going deeper into debt. No, it's not. It's America going deeper into debt that is screwing up the global economy. In particular, we have evidence, as I said, we'll talk about in Egypt, where our policy is contributing to Egyptian inflation and the civil unrest and the protests going on. But I wanted to talk a little bit more, and I'm probably going to have to, pull over into the next section. But we spoke about the State of the Union address the day that it came out. But I got an article with some very interesting comments. Sometimes I read things I wish I'd have said that myself. And that's the case with this column by Ira Stoll, pointing out, what I also pointed out, but I think he did a better job than I did. But let me remind you by playing a couple of cuts from the State of the Union, or where President Obama was highlighting this plant in Wisconsin that was involved in clean energy as some kind of beacon of America's future. So play cut number 2.
Just a few years ago, this was an empty warehouse. A major employer had shut down this factory, moved its operations abroad, and took a lot of jobs away from this town. Today, this is a thriving enterprise once more. You're looking at part of a factory where 250 workers are building advanced clean energy systems, state-of-the-art technologies that use solar power and energy efficiency to save farms and businesses thousands of dollars on their utility bills. I'm here because this business and others like it are showing us the way forward.
All right, so here is the company that President Obama is holding out as a shining example of success. Well, Ira Stoll looked into it, and the company is it's Orion, Orion Energy Systems. Right now, back in 2007, the stock was trading around $19 a share. Today, it's at $4. So it's gone from $19 to $4. Now, would anybody call that a success? Does anybody who bought stock at $19 think this company is a great success that the president should hold up as an example that we should all emulate, because the stock's gone from $19 from $4? I mean, if that had happened to all of our stock portfolios, would we consider it a success? Would we want to reward our investment advisors if they managed to have us invested in companies that went from $19 down to $4? In fact, the company is losing money right now. They're cash flow negative. So it is a money-losing company. And guess who happens to be the largest shareholder of this company? Oh, it's General Electric. And, of course, General Electric stock is down by 50% or more in the last 10 years as well. Yet this is what President Obama thinks the whole country should look like. We should all emulate this money-losing job and a company that has destroyed shareholder value by producing products that nobody wants. Anyway, I'm going to continue this after the break. Don't go away. You are listening to The Peter Schiff Show on SchiffRadio.com. Welcome back, everybody. This is Peter Schiff, and I just found out that my guest, Eric Bolling, is a little tied up, so he's not going to come on until 11:05, so at the top of the second hour of the show. Also, I noticed, again, another new sponsor regarding investment products or letters, and just want to remind everybody, I've got, I have not checked into any of the sponsors of my show when it comes to investments. I don't even control the advertisers right now in the new format. So I'm not saying that you shouldn't utilize any of the services that are advertised on my show. All I'm saying is I haven't checked them out. So there are no, I'm an investment advisor, I'm a stockbroker, and so if you hear commercials on this show for any kind of investment products or services, check them out yourself. They have not been endorsed by me. I haven't looked into them. I have no idea what's going on. The only investment letters that I recommend or investment services are my own, because there I control them. I know what the context is. I'm responsible, and you can hold me responsible. But any of the advertisers on this show, you got to do your own homework. You got to check it out. Anyway, going back to the clips I was playing from Obama. So let's go back and play this next Obama cut regarding his plans for clean energy and this factory that he showed from GE that's losing money. But play Obama cut number 3.
We have to reform our government and cut wasteful spending so that we eliminate what we don't need to pay for the investments we need to grow, like education and medical research. As we can see here at Manitowoc, we need to ensure that we're promoting innovation, especially in promising areas like clean energy. This is going to be key to growing our economy and helping businesses create jobs. Orion, for example, was able to open with the help of small business loans and incentives that are creating demand for clean energy technologies like wind power and solar panels. That's why I've proposed a bigger tax credit for the research that companies do. And to give these companies the certainty of knowing there will be a market for what they sell, I set this goal for America. By 2035, 80% of electricity should come from clean energy.
Yeah, so again, it's not up to government to pick winners and losers and try to make sure there's a market for what this company is going to sell. Businessmen don't have any certainty. They don't know if there's going to be a market for what they're selling. I mean, this whole thing is nonsense. Meanwhile, he's talking about the fact that this company was set up with private capital. Yeah, and they're about to lose because they made a bad investment. They're doing something that's not worthwhile, and now President Obama is coming to the rescue with a tax credit so that they can keep on doing something that they shouldn't do, and we should force everybody else to pay the taxes. Now, here's what Ira Stoll wrote about it. I'll read it because it's pretty good. He said, what might look like a promising area to one person might turn out not to be so, while areas that might not seem promising can turn out to be exceedingly so. The best way to sort out what's promising is not for the president to decide, but to let tens of millions of individuals allocate their own capital, not capital taken from taxpayers by force, but private capital. This is what President Obama is talking about. It's the very definition of socialism. And Ira Stoll, he comes in and makes some examples of, he goes back and he talks about the automobile, Henry Ford, the Model T. Did the government at the time try to guarantee Ford that they'd have a market for their products? Did the government declare that by a certain period of time, 80% of the people will be trading in their horses and using the horseless carriage? No. The government didn't need to help the automobile industry. It developed because it was better than riding around on horses, right? The market preferred horseless carriages to horses. I mean, the government didn't have to do anything. And then a more recent example was the iPod, which revolutionized the way everybody buys music. No one goes to the record or CD store anymore. They download their music through the internet on their iPods. Did that happen because the government gave Apple a tax credit? No. Did the government ensure that there'd be a market for the iPod? No. Apple took a chance. They innovated. They responded to market forces. Now, if the iPod had not worked out, Apple would have taken a loss and they would have stopped promoting it a long time ago. The reason that they kept doing it was because the public liked it. The public wanted it. So what Barack Obama is going to do with this clean energy is they're going to try to force feed it down our throats, whether we want it or not. And of course, he made a good a comment. If the government is going to give tax credits and they're going to require people to buy a company's product, why should they make it any good? If they know the government's going to create a market, I mean, who cares? And what we want is we want businesses to satisfy real demands, and they have to be guided by profit and loss. That's why when the president talks about the government making investments, the government doesn't make investments because a bad investment that produces a loss gets shut down. The government can lose money indefinitely because it just keeps borrowing it or raising taxes. So we need to have market mechanisms to correct mistakes. I mentioned on the other show my father's experience with the World's Fair in 1939, where one person's vision of America in the future was a helicopter in every driveway. Now, I can imagine if we had a president back at that time who thought that this made sense and decided to give big subsidies and tax breaks to helicopter companies, thinking that we're all going to fly around in helicopters. But obviously, it didn't work out that way. Nobody knows. I mean, the government didn't anticipate the cell phone. Right? This stuff came on its own. All the big innovations happened on their own. It wasn't that the government planned it. Yeah, now the government always likes to talk about the fact that, we got something, we got Tupperware out of the space program, or we got Tang, or whatever we got, or different things. Yeah, if you spend enough money, we're going to get something out of it. But you know what? What would we have gotten had the government not wasted all this money going to the moon? Had we not had all this money spent on space, maybe we would have come up with something even better. Who knows? But to try to, hold out these examples and say, we have to have the government doing things. We have plenty of examples throughout the world of countries where government was in complete control, and it was a complete disaster. I mean, how many great new technologies came out of the Soviet Union? What did these government manipulators or central planners, what great new things did they come up with? I mean, all they could make there were weapons. And the reason the Soviets could make weapons is because they didn't have to sell them to anybody. They didn't have to get a consumer to buy them. They just used them. And of course, their weapons weren't even as good as the ones that we had. Anyway, let me see if I can take some questions from the callers. Who do we got right now? Jimmy in Illinois. You're on with Peter Schiff.
Hey, thank you for taking my call. And I was just thinking about the car industry while I was looking at it yesterday on the auto show, that how the government's going to destroy them again, even if they had a chance to survive here in America because of their interference with the market, trying to push these electric cars on everybody. So let them be innovative by themselves. But I just had a question about. Yeah, go ahead.
Yeah, I said, well, we're running out of time up on this break. I kind of lost track of it. So why don't we do this? Why don't you hang on through this commercial, and when we come back, we'll talk a little bit more about electric cars or whatever your question happens to be. Welcome back, everybody, to the Peter Schiff Show. The metals that started to rally back a little bit. Silver is actually positive now on the day. Just during the commercial break, gold got to down only $3, but then all of a sudden in the last 30 seconds or so it's now dropped another 4, so it's back down to 7. So it's having a little bit of a harder time going positive right now. I don't know what really hit the market pretty hard in this last couple of minutes of trading. But anyway, we'll keep a watch on it during the course of the program. In the meantime, we broke from my caller. I'm talking from Jimmy in Illinois, and I think we're talking about electric cars.
Yeah, I was just mentioning how the government destroys and diverts, instead of maybe putting more money into fuel efficiency on cars, or diverting their attention on electric cars. And somebody was saying about electric cars in the wintertime were just going to be a flat-out bad idea because they're just not going to go very fast. But I was just wondering about in the area of buying stocks versus stocks with dividends, because you always want a good cash flow. I just finished reading your book, Crash Proof 2.0, and you talked a little bit about that and kind of extensively in the end there, but can you explain that in more detail? Price, you said it wasn't necessarily the amount. You don't want to pay a high price for low dividends. Can you explain that a little bit more?
Well, first of all, the price of a stock is only important if you relate it to something like its earnings or its yield, because a $100 stock could be cheap and a 10-cent stock could be expensive. It all depends. Just the price by itself, price doesn't tell you anything about whether a company is a good deal. A lot of people make the mistake of they see a stock and they think it's cheap because the price is down. It might not be cheap at all. Berkshire Hathaway could be tens of thousands of dollars a share, but it might be inexpensive based on the assets that it has. So you have to, do your homework. But the important thing about stocks is dividend. I mean, people overlook that. I mean, if you are an investor, you have to look for dividends. If you're buying stocks because you think they're going to go up, then you're a speculator. And there's nothing wrong with speculating. You just have to know the difference between investing and speculating. If you buy raw land and you have no income, you're a speculator in land. If you buy a building with tenants and you're collecting rents, you're a real estate investor, right? If you buy a bond that pays interest, well, then you're a bond investor. If you buy if you buy a distressed debt that is not paying any interest, you're speculating in debt. And the same thing in stocks. If you want to be an investor, you have to invest for a rate of return, and that is not dependent on whether or not the stock goes up and down. A stock market investor can profit regardless of what the price of the stock does because he is collecting the dividends. Dividends are to stocks what rents are to real estate, what interest is to bonds. That's where your return comes from, and Wall Street, most brokerage firms completely forget about that. And a lot of the reasons is, these big companies, they don't pay any dividends because they pay all the profits to their executives. But that doesn't help me. If I'm owning a company, yet all the profits go to my employees, what good is that? I want the profits going to me. So when I'm investing, you really got to look at the dividend yield and make sure that you as a shareholder are getting paid. But, the first part of your question about, the government promoting electric cars, the government shouldn't promote anything. If people want electric cars, then there will be companies that will produce them to satisfy that demand. If you can only get electric cars produced because the government is subsidizing it, then the market doesn't want it. The public doesn't want electric cars. Now, maybe one day they will, but it's not up to the government. I feel the same way about fuel efficiency. The government shouldn't be mandating fuel efficiency. People should buy fuel-efficient cars if they want them. And if the public wants fuel-efficient cars, then the government, then the market will provide them. There will be a profit in it. But, the government does the opposite. The government gives incentives. And I know this. I did this myself in my business. The government gave incentives to buying SUVs, that if you bought an SUV or a truck that weighed above 6,000 pounds, you were able to write it off in the first year. But if you bought a normal car, a fuel-efficient car, you had to depreciate it over 5 years or 7 years, whatever it was. And so the government for years had a huge subsidy to subsidize Americans to go buy the most unfuel-efficient cars there could be. So on the one hand, they're trying to set these standards of fuel efficiency to encourage fuel-efficient use, and then they have a huge tax subsidy to encourage people to buy the least fuel-efficient cars on the market. The government's the right hand is undoing what the left hand is doing. All of these decisions should be made by the market. The people decide. When you buy a car, you pick. Do you want certain you want a sunroof? Do you want air conditioning? Do you want four-wheel drive? And people pick on fuel efficiency. Some people want fuel-efficient cars. Other people couldn't care less. But it's not up to the government to decide that. And whenever they do, all they're doing is trying to reward generally one of their special interests, somebody who is helping them get reelected. And so you want to take the power away from the politicians to be able to reward the special interests by not allowing the government to pick any winners or losers, to pick any technology that is deserving of special subsidies. Everything should survive or fail based on the market. If somebody can design a product that the public wants to buy at a quality that they like, at a price they can afford, then they'll be rewarded. They'll make money. The business will thrive. If somebody makes a mistake, remember the famous, the automobile, the Edsel, right? It was going to be a great new innovative car, but it was a flop. Nobody wanted it, right? Well, what if the government decided that the Edsel was it, and they were going to give big subsidies to the manufacturer of the Edsel to keep on making a car that nobody wanted and force everybody to buy it because some bureaucrat liked the design and thought everybody should be buying Edsels. Now, what it really would have been is maybe there was some political payoff going on. You don't want that. Products fail and succeed all the time. That is the beauty of the free market.
Well, I think they tried that, didn't they, with the cash for clunkers to get everybody to get a car?
Well, cash for clunkers was just, cash for clunkers. And, of course, one of the reasons they did that is because the government owned the auto companies. And so they tried to figure out a way to get everybody to buy the products of the companies that they had just nationalized. And they wanted everybody spending money. But it was, cash for clunkers was about the dumbest program ever devised because at a point in time when we were in a recession, what this program did is it encouraged the destruction of assets, automobiles that worked. They had to destroy them. They had to pour acid on the batteries, on the engines, so that they can never be driven. So we destroyed cars that already existed so that we can go into debt to buy brand new cars, many of which were imported from foreign countries. So we ran up our trade deficit, and then we took people who had fully paid up cars, right? And now they have payments. The people have car payments for 5, 6, 7 years. And of course, by doing that, we destroyed a lot of used cars, which meant used car prices went up, making it more expensive for people to buy used cars because so many used cars were destroyed. It was an asinine program that only a politician would be stupid enough to concoct.
I was at a car dealership auction, and the price of the car, when the guy said, I couldn't believe the price these cars are going, and it was a direct result of Cash for Clunkers. Well, thank you for taking my call. Enjoy your radio program. And
yeah, look, there's nothing wrong with clunkers. You know, my first car in high school, I guess maybe it was a clunker. A lot of people's first cars are clunkers. There's demand. You know, kids to 18, 16, 17, 18, they get a car. They're not buying a brand new car. You know, and I think a lot of Americans that are buying brand new cars shouldn't be buying them. You know, the statistics, I mentioned it several times. In China, 90%, I think, of the people who are buying cars in China are paying cash. They're buying what they can afford. In America, 80% of the people buying cars are taking out loans to buy cars. If you have to take out a loan to buy a car, you're buying a car that's too expensive. Buy a cheaper car where you don't need a loan and save up. And when you can afford to buy an expensive car, buy one. But don't go into debt to do it. That is a mistake, and unfortunately we encourage that in this country all too often. Anyway, don't go away. We're running out of time for this segment. We're going to come back. I'm going to talk about personal income and spending numbers that came out today.